The market bouncing back from U.S.-China trade fears, but chip stocks getting left behind and down almost 2% to end the day. Bob Pisani is at the NYSE to break it all down. Hi, Bob.
Hello, Melissa. It could have been a lot worse. So semiconductors were indeed down, but the low print of the day was the open for virtually all the semiconductors, including Intel, Texas Instruments, Qualcomm, NVIDIA, Micron. Most were down about 4% in the first few minutes of trading and closed with losses only about half of that. So here's the bigger question. Why is the semiconductor ETF up more than 30% this year? Many chip companies get more than 60% of their revenues from China. The SMH, which is a basket of the top 25 semiconductors in ETF, it's been rallying even as commentary about the China business has been very cautious here. So the bulls have been saying, well, semiconductors and stocks in general, they've been rallying because earnings have been not as bad as feared. All right, that's true, but the semiconductor commentary does not reflect the consensus that weakness in China has bottomed. Just take a look at this. Texas Instruments, for example, said weakness in sales will likely continue in China. Intel noted an acute deceleration, that's their word, in demand for chips in China. Lam Research, it makes the machines that makes the chips, said that a spending correction from its clients continues. And even Qualcomm said its weaker revenue guidance reflects weakness in China that's ongoing. Only Taiwan Semi sounded bullish to me recently, saying, we believe we may have passed the bottom of the cycle of our business. So here's the bottom line, Melissa. Traders have come to believe that after a more than 25% drop in semiconductors from October to December of last year, that the worst is behind us all. But a lot has to go right for that to be true, including a bottoming in the Chinese economy and, separately but related, the conclusion of a trade deal. Back to you, Melissa.
All right, Bob, thank you. Bob Pisani at the NYSE. Dan Nathan.
That was a lot. Bob nailed it as far as guidance was concerned when you think about it. So the question is, why is the SMH, which is made up 35%, is Intel, Taiwan Semi, and Qualcomm, why is it up 35% in the year? Well, it got nailed, and it really underperformed last year, got nailed at the end of the year. I'll just make one point. We talked about this last week. A lot of people have been pointing to Apple and what they had to say about China and how much that changed versus their pre-announcement in January. And I'll just tell you one thing. You and I were talking about it. I think you brought it up on the show last week. They got the benefit from the Chinese government getting rid of the VAT. They discounted their phones dramatically. It seemed like just kind of a reset of just a massive drop-off at the end of last year. So to me, I wouldn't be taking the Apple data point over what Intel and Texan told you directly.
I think Qualcomm's its own animal. I don't think this quarter is indicative of what they're going to be a year and a half from now with this 5G thing, although who knows when it's coming. I'm ready for it. I just want you to know
5G,
now. But I will tell you, I do know the 5G rollout's going to be tremendous. It's not just one more than four. It's like an exponential thing. I don't want to get too granular here, but you know what I'm talking about.
Don't worry,
that said, Texas Instruments at 21 times next year's number, when they told you things are slowing down, off a double top from January of 2018, in my opinion, is a sale.
Sorry, sounding all charty there.
Very charty. I
Our
like
next
the
guest says if history is any indication, this could be the perfect time to dip into chip stocks. Oppenheimer's Ari Wald's over at the Plasma with the details. He's an actual chartist.
An actual chartist.
Hi, Melissa. Yeah, put us in the bullish camp here. That we are of the view that this pullback in semis, even if it were to continue, is viable. That the worst is behind, and that we are in the early stages of a new upcycle. That's what the charts argue for. Here's what I'm talking about. Now, looking at the semiconductor ETF, SOXX, the cycle I'm talking about is a 20% decline, followed by a new high above year-long resistance, where you're moving above a prior peak from at least a year ago. Now, we've had this a few times. We had it in 2011. The new high came in 2013. This was followed by almost a 2-year rally into the 2015 peak. Another reset in 2015, 23% decline. Breakout in mid-2016, terrific rally into 2018. Now, there's no way to know if the trajectory is going to be the same, but here's a very simple rule. Assume it will be the same as long as you're above the breakout level. As long as we've cleared the resistance from 2018, it's about $200 on SOXX. Assume this is a new upcycle. Two names we like here. First one is Broadcom, ticker AVGO. This has been the steady leadership name. This is a stock that bottomed ahead of the market. It made a lower high. This was December right here when everything else was in absolute free fall. And it really broke out to the upside ahead of the market as well. That breakout point 285, now support. This is leadership. This is momentum. This is the type of stock that historically has outperformed the benchmark. Stock you want to own. Next on our list, Lam Research, LRCX. Hasn't broken out yet. Still is a pre-breakout idea, still below resistance from 2018. But it has cleared an important level that I think you want to keep an eye on. 198. This was the breakdown level. Going back to last summer, there was a break in trend. We fell below the 200-day moving average at 198. Now we're back above it. I think that's meaningful. I think at the least, the trading action should be considered positive while we're above it. We have a uptick in the 200-day moving average, some higher lows there. We have a bearish to bullish reversal here. Semis, it's broadly based too. It's not just these names. It's really across the board. Something's going on in semis. You want to participate. This is a new upcycle, is our take.
So there is an argument, Ari, that semis are an indicator of the market direction, that somehow it's a leading indicator. So if you think it's on an upswing, does that necessarily mean the markets are looking okay too?
That's our take on the market as well, that participation is broadening globally. We're seeing better improvement in global equity markets, and it's been the right areas as well. Semiconductors, industrials turning up. I think after that small bear market in the fourth quarter of 2018, markets breaking out to the upside. This is a new bull cycle based on our work.
Ari, thank you. Ari Wald of Oppenheimer. New bull cycle. Brian Kelly.
Well, it's interesting. To me, the semis are ground zero for everything we're talking about. Bob pointed out about how there's been a deceleration in earnings and all that, yet the stocks are going higher. So market participants are anticipating this turn here. If you take the semiconductors, overlay them on PMIs, you get a pretty good leading indicator in the semis. So watch this sector as long as Ari said, they don't break these breakout levels. In SMH, I think it's like about 112.5. That's your support level. As long as you are there and the market continues higher, I think semis are a buy.
Well, if you look at Intel, and essentially they absolutely reset expectations. And so the stock's down almost 15% when it's 13% of the SMH or the stocks or whatever you're looking for. That actually gives you a fair amount of, I think, defensive quality to this thing here. I think Intel is the stock to own. And on this weakness, I would stay long Intel, not the semis.